Mhm. Alrighty. Well, we are geared up and ready to go. Hey everyone, that is getting here a little bit early. I appreciate your attendance. We're going to get started right at 11 Central Time. So just hang tight. A lot of people end up dripping in right as we get closer. So hang tight. We'll be with you soon. Alrighty, everyone. Well, we are hitting 11 on the dot. So I'm going to get rolling. Just want to make sure that I'm being respectful of everybody's time. There is a chat box too. So if any questions pop up as I'm kind of going through things, feel free to comment in the chat box. Usually I get back to it. Um, when I'm done. Hold on, I'm making sure the settings. Okay, cool. Yeah. So anyway, we'll get this thing moving. So I appreciate everybody's interest in this topic. I think that this is a really important one because truthfully, the landscape of working with a financial services professional has changed dramatically over the past 10 years. So, a lot of people maybe have existing relationships with people, whether it's somebody at a bank, a family friend. The goal realistically of this presentation is to help you understand what it looks like working or having a working relationship with a financial planner or a fiduciary. A lot of you may have heard that buzzword over the past couple years because it has gotten increasingly more important as the complexities of the financial services industry have, somewhat expanded. So realistically, what we're going to be covering today is, okay, well, first of all, what is a financial planner? What is a fiduciary? What does a working relationship with that one professional such as that look like? And, what is the process of working with a financial planner kind of look like from start to finish, soup to nuts? So our agenda for this early afternoon, we're just going to tell you a little bit about who I am, who financial planners are, what it looks like, as I said, working with a financial planner, what the financial planning process looks like, and of course, our approach, which is largely similar to any fiduciary that you would work with. I will precursor and apologize up front. I just came back from a trip to Ireland and Scotland, and the individual on the 8-hour plane ride from Dublin to O'Hare next to me was sick with the sniffles, the coughs, and the sneezes. And now I have the sniffles, the coughs, and the sneezes. So sorry, but you're going to have to put up with my congested self. But anyway, I'll do my best. And, at the end of the day, let's just share some information so you can kind of walk away empowered and informed. So, this is me on a good day. Let me tell you a little bit about myself for those of you who have not been to previous webinars that we have hosted for our preferred members over at, Advocate Aurora, Optum Health. There's a couple that are on this call right now. So, like I said, my name is Lucas Amell. In terms of education, I went to Carroll University over here in Waukesha, Wisconsin, got a bachelor's in financial planning, investment management, entrepreneurship. In terms of how I kind of turned that into a career, I've been in the financial services industry as a licensed fiduciary now for 8 years. I've gone on to pass kind of a myriad of different tests that allow me to best service the people that I work with, whether clients or just doing charitable work. I have what's known as the Series 7 as well as the Series 66. So that does make me a licensed fiduciary if I choose to practice in that capacity, which I do. My why is being in the industry for as long as I have. I've worked with over 1,000 families and really have seen just the difference of proactive decision making versus reactive decision making. And that's why we do these webinars. I'm trying to get as much information out to folks as humanly possible so they can be proactive. When it comes to your finances, you never want to be reactive. If somebody passes away and there's no listed beneficiaries or estate plan, it can be very messy. For an example, my uncle during COVID, unfortunately, he passed away. He was a single guy. He had no kids, never got married. So all of his money, there was no beneficiaries named on accounts. When he passed away, those assets needed to go through what's known as probate court. Probate ends up costing you about 5 to 7% of anything that goes through it for lawyers that you probably did not want. It just became a nightmare that it ended up he never knew his own dad because he walked out when they were just kids. But based on the laws in Wisconsin, it flows to your next of kin, meaning his parents. So because he didn't have named beneficiaries, this guy who was never a part of his life had to come back in, and it just became this big, big, big mess. So I have hundreds of stories similar to that where it's like, if only I would have known this, or if only I would have talked to somebody, because it doesn't cost you anything to put a beneficiary on an account. It's just more, okay, well, do you know about these things? Same with taxes, same with retirement planning. I have so many stories, but what gets me out of bed in the morning is knowing that I'm in a position where I can educate the masses to help them be aware of some of these pitfalls and hopefully give them the tools that they need to be proactive to, have a plan in place beforehand. So they're being proactive, not reactive. In terms of the organization that's behind me, it kind of goes up from the picture of me. I am a sole proprietor. I do own my own business. I have for a long time. However, I am on a team as well. We're called the Lettenberger Financial Group. Between me and my two partners, we're managing and overseeing in excess of $300 million with thousands of clients all across the country. We are affiliated with an agency known as the West Point Financial Group. That's the largest agency in the entire Midwest, comprised of about 450 financial advisors. They all own their own shops and stuff like that. And then the big mothership that we're affiliated with is Mass Mutual. They're one of the largest broker dealers as well as one of the largest insurance providers in the world at this point. So all in all, people work with me, but I'm able to pull on resources from those other three locations. So I just like people to know that, it's not just Lucas working out of his home office. There's a significant backing when it comes to resources that I can tap into for the individuals that I am working with. But enough about who I am. Who I am not. I am not a licensed CPA, nor am I a practicing attorney. So anything that we're going to cover today, anything that we're going to talk about, please understand that I'm not giving tax advice, nor am I giving legal counsel, nor am I giving financial counsel, because truthfully, in order to operate as a fiduciary, I need to understand somebody's situation before I can give them advice. So everything that we're going to be covering today is going to be very general in nature, just informative. So you, like I said, can walk away with the tools and information that you might need to make good decisions, be proactive about your situation. So, why is working with a financial planner important? A financial planner, one of their biggest jobs and roles is to take inventory of your situation. Most people, especially as they age, especially if they have kids, purchase properties, transition from job to job, get raises, you start accumulating a lot of stuff in a lot of different places. And sometimes people truthfully lose track of those things. So first and foremost, a financial planner's job is to kind of give you a snapshot of, hey, here's everything you have, here's what your net worth looks like. Then digging deeper into those things, saying, hey, you have this old 401k. What's the goal of that 401k? How is it invested? And are those goals and actualities in alignment, or do you need to make adjustments? The second big thing with a financial planner is understanding what matters to you and your individual circumstances, your family situation. Then, by understanding, hey, here's what you got, here's what's important to you, how do we tie those things together in order for us as fiduciaries to give you advice, to give you guidance, to give you support, and to offer you alternatives based on what you're doing that are more potentially in alignment with your goals. So I really like the quote down there at the bottom, a financial planner is a bridge between what your goals are and the strategies that you need to implement in order to achieve those goals. And it's completely different for every single person. So continuing on, kind of talking about what are the benefits, what does it look like to work with a financial planner? It's a trust-based relationship. You need to have them have an understanding of who you are, what's important to you, and of course, what you have. Some of the conversations that I'm having with folks, they're telling me stuff that they don't tell their closest friends, that they don't tell their family, because with this, you need a sense of vulnerability. You need almost this intimate conversational relationship where, the professional that you're working with really understands you and what's important to you. I like to say it a lot. There's a lot of people that do what I do, and at the end of the day, you need to be selecting someone first and foremost that's licensed as a fiduciary, but probably more important, somebody that you really get along with, you know them, and you feel like you can trust them. So it's important they understand your whole picture. They're helping you integrate strategies or, maintain strategies that are already in place that are working. But at the end of the day, this is just giving the individual, not the professional, confidence and control over their financial situation. A lot of people, when I first meet with them, going back to what I was saying before, they've got things all over. It's not congruent. They're like, I know I should have done this. I know I should have done this. I know I need a will. I know I need to update that. Working with a financial professional is working with any coach, a football coach, a basketball coach, whatever it is. It's a person who sees, hey, here's what you want to accomplish, here's what we have to get done. And they help hold you accountable to getting these things done. Because when it comes down to it, at the end of the day, you're the CEO of your financial situation. Okay, nothing happens unless you choose to make it happen, unless you're signing off and you are checking the boxes. A financial planner or a fiduciary's role is to help you understand the importance of doing that and make it as easy for you to complete as possible. So continuing our benefits, having a financial professional in your corner is undoubtedly a huge, huge benefit. I've helped people like in nursing homes who were being taken advantage of a moving company trying to double bill them, call them and say, hey, you can't do this. Now, is that my job? No, not necessarily. But having an individual who you can say, hey, I'm thinking about selling my vacation home. What are the tax ramifications of that? Hey, I'm thinking of giving my kids money. What are the ramifications of that? Or I want to leave this charity this. What's the most efficient way to do that? Having a licensed professional who is only acting in your best interest that you can have as a sounding board for those large or even small financial decisions, you can't even put a price on the value of that. As I was saying, helping you staying on track to meeting your financial goals above and beyond this is helping you actually define what your financial goals are. A lot of folks, when I first start talking to them, they say, hey, I want to retire at 65. And I'll say, oh, perfect. Why? Or what does that look like? And they'll be like, well, what do you mean? Well, how much money do you need on a month-to-month basis? What made you pick that 65 number? Almost everything when it comes to the goals that exist out there for individuals, when it comes to your finances, there's multiple layers of questions that go further into, hey, why do you want to retire at 65 or what does that look like? So having a financial planner in your corner can help you brainstorm as to, oh, hey, I said this was important to me, but why is it actually important to me? Let's dive a little bit deeper into that. Ultimately, the goal is that you're going to be achieving a higher standard of living, working with a financial planner, helping you organize things, helping you understand what your cash flow looks like, lining up your strategies to your goals, and of course, like tax management. Now, I said I'm not a CPA, but at the same time, tax or financial planners, a large focus is how are you set up from a tax standpoint? Do you have all your money in pre-tax? Do you have a Roth IRA? Do you have a company account? There's a lot of little nuances that are out there that can optimize how you're saving by where you're saving. And then, of course, as I've said a couple times now, just being able to help you improve your financial knowledge. There's a lot of things that I'm able to help people with where technically I don't get paid for it, but it's improving their lives. I just had this instance happen with a client of mine where, her kid was just about to graduate college. They weren't the best with money and their credit score was terrible to a point where it's like they're never going to be able to buy a house. They're going to have to live in my basement for 5 years while they improve their credit. And I was able to just tell them, hey, Mr. and Mrs. Client, did you know that you can just put them on as an authorized user for your credit card? And as long as you're responsible with your credit, it positively impacts them. And they left crying of happiness because they just thought that their kid was buried in this thing. And that's kind of what I'm talking about is there's a lot of little nuances that are out there that someone like me, we see these on a regular basis, but someone such as yourselves watching these videos, you're usually only familiar with what your situation is, and you might not even see a problem or a solution to something in your situation because what you know is all that you've experienced. Where a financial planner, they've worked with hundreds, if not thousands, of families. So let's talk a little bit about what the financial planning process is, what it looks like, some of the main topics that we do cover. So, the first step with all financial planning engagements is an engagement meeting. It's meeting with a financial planner, talking about your goals, what's important to you. So, from retirement to risk management, like how volatile are your investment accounts, to minimizing how much you're paying in taxes. Is funding college for your kids, your grandkids, your nieces and nephews important? Charitable giving, legacy planning, leaving money behind for, your heirs, whether it's kids, charities, stuff like that. And then, of course, investments, which is similar to risk management. But these are things that we talk about like as an all-encompassing conversation. Now, oftentimes, one of these things will be more timely, more top of mind for folks. And the way I run my practice and my partners run their practices, usually we're talking about what you want to talk about, but at the same time, we're putting consideration into all of these different things when we're advising so we can maintain, that holistic stature. But through the engagement meeting, we're usually able to identify, hey, where do you stand on your retirement, risk management, tax? Really get to know you, like I was saying, and what's important to you and why it's important. From there, we gather the data. So this is going back to what I was saying before is we need to have a general understanding of the snapshot of who you are, where you are, and of course, what you have. So cash, how much you got sitting in the bank. And then, of course, I would say cash flow is one of the most important things that we deal with and help folks deal with. Understanding what's coming in, where is it going, and then what's left and where does what's left go. That's usually the biggest tail of an individual or household circumstances is understanding, okay, where is the cash going? You always hear cash is king. Liabilities, this has become largely important just from the high interest rate environment that we're in right now, from mortgages to credit cards. I've been helping a lot of people unwind credit card debt just because the rates are so high right now. So understanding liabilities, how that impacts you in the short and the long term. Your income, of course, protection. So this is like various forms of insurances, whether it's life insurance or income protection insurance or disability insurance. Most people, they think that they're fine with what they get through work until they really like look at it and you understand, hey, you're making $100,000 a year. How much are you worth over the next 20 years? Well, it's $2 million, and it's technically more than that because every year you're going to get a raise, you're going to be adjusted for inflation. Now, if you have a mortgage, you have a spouse, you have kids, most employers give you 1 times your salary as an employee benefit for life insurance. Sometimes that's even taxable, a portion of it. So when you look at it, $100,000 if you kick the bucket early is really not as much as you might think. So a lot of times we're really looking at making sure that somebody's properly covered. Same with disability. Most employers, they're going to offer their employees about 50 to 60% of their salary if something were to happen and they can't go to work. Of that 50 to 60%, that's fully taxable to you as the recipient. So say you were making 100 grand, they're giving you 50%, they're going to pay you $50,000, but that $50,000 is taxable. So realistically, you're going from earning $100,000 a year to maybe earning closer to 35 or 40. So a lot of people don't understand that, but when they do, they understand the importance of, hey, I should probably address this. Workplace benefits, there's a myriad of different selections for people. I deal a lot in the space is helping people during their open enrollment period select additional amounts of insurance, both life insurance and disability. Most employers do offer that, but then also just to understand a lot of the fringe benefits. One of the things that I see very, very frequently in my role is that people don't have important estate planning documents in place, such as a will, such as powers of attorney for healthcare and finance. A lot of employers actually offer you discounted legal services where you can get those in place for a fraction of the cost as if you were to go and shop the private marketplace. Taxes, this is a huge one, especially for the next couple of years as we're heading into a new tax law. Sometimes it's not a disadvantage for you to be paying more in taxes. I'm actually largely encouraging a lot of folks that I work with to pay more in taxes to shovel money into like the Roth category. It's a huge, huge opportunity with where we are in the current tax rates right now. Investments. How are you set up? Where are you set up? Why are you set up that way? It's important at a minimum for you to understand what you got and why it's doing what it's doing. Paperwork is paperwork. So once we have a big picture of everything that you have, what's important to you, we start tying those things together. So as I was saying, cash flow is one of the most important things to a financial situation and plan. It ultimately is the engine that's going to take you from where you are to where you want to be, is being proactive and prudent with where you're allowing your cash to flow. Retirement plan. So how are you utilizing both what's in your employer and outside of your employer? Is that optimal for what your goals and situation are? That's something that we talk about. Estate planning options. This is kind of what I mentioned earlier too, just having beneficiaries on everything. Pardon me, having a will, having powers of attorney, having stuff set up so if you want to leave money to charities, that flows in an efficient way. Protection, so life insurance, disability coverage. And then, are we being proactive with taxes? Meaning, are we paying more? Are we paying less? Do you have an HSA that you're taking advantage of? Do you have 529 plans that you're taking advantage of? There's a lot of little nuances. For example, I am working with a gentleman right now. He's going back to school for his master's program. He's in his 50s. And I said, hey, you're going to have to drop $8,000 for your tuition. Why don't we put that money into a 529 plan in your state and then pay it? And he's like, I thought 529 plans were only for kids. Well, they're not. It's a qualifying education account. So even though he had the $8,000 in his bank and was going to go pay it, we're able to put the $8,000 into the 529 plan, then pay it. And he's able to qualify for credits right up front because he contributed to a 529 plan. Now, there's a $5,000 minimum for the credit, but we far exceeded that. So like I said, there's a lot of little nuances that exist out there. And if you don't swim in the space and you're not aware of them, it's very easy to overlook these tiny little money moves. Going back to the taxes and an HSA account, I have a client, they go to therapy every month, right? And they weren't really using their HSA. And I said, hey, man, you're paying $200 a month to meet with this therapist. Why don't we put $200 a month into your HSA and then pay for your therapy through your HSA? They're like, wow, I didn't think of that. But at the end of the day, that $200 every month is exempt from income taxes because it's going into that health savings account. So if people have access to health savings account, I'm huge proponent of, contributing to those and paying all medical expenses out of them, because then any dollars that you're using for those medical expenses are exempt from state and federal income tax. So from there, we get all the information, we tie it together with the goals, and we start developing your strategy. So we're going to look at just analyzing and developing these strategies and really kind of honing in on, okay, well, what do you need? And this is kind of, okay, well, I need this stable, predictable income source for retirement income. What do you want? that kind of goes above and beyond. Hey, the house is paid for, my clothes are paid for, my food is paid for, my travel is paid for. The want side of things is like, hey, I want to spoil the grandkids, et cetera, et cetera. You always need some kind of an emergency fund. We need some kind of plan for what's happening after. Now, with this slide, I could change this to any number of some of these things that we had talked about earlier, any number of these, right? So we talked about retirement, that we can apply this to charitable giving. We can apply this to college savings. There's a lot of different goals that are out there that you kind of need to microscope into and look at, okay, well, what are the pros? What are the cons? What do we need to do differently? What do we need to keep the same? And then that's an ongoing thing. And that's something that you need to know in working with a fiduciary, is that it's an ongoing relationship. Now, I meet with most of my clients on a quarterly basis. Sometimes they don't need to meet, sometimes they don't want to meet every quarter, but I make myself available for folks every quarter just because stuff changes. People die, people are born, jobs change, raises happen. Uh, the environment of the interest rates and the economy changes. It's important that you're having an ongoing conversation and an ongoing relationship as things both inside your house and outside your house are changing. So once we've kind of done all that, that's when we present our, solutions and a documented plan. A lot of people will think, hey, I'm working with a fiduciary, but then I'll ask them, okay, well, where's your documented financial plan? Let me review that. And they'll be like, what? And I'll be like, well, you're probably not working with a fiduciary, because you should, under the law of like the fiduciary standard, they should be giving you and furnishing you a compliance approved documented plan that's outlining your goals, your net worth, the strategy and tactics that they're recommending, the various accounts that you have, how they're set up, and breaking it down from, say, you're 40, well, here's what it looks like when you're 45, 50, 55, 60, retired and on. So it's very important that you do have some kind of a documented plan that you can make sure runs. When it comes to implementing the strategies, these are kind of the big three that I've mentioned quite a few times now. Asset alignment, are they all in pre-tax? Are they all on 401 or Roth? Cash flow management, that's our engine here. Investment monitoring, do we need to make adjustments to what we're invested in, how aggressive those investments are? Do we foresee that the economy is going to make a certain shift? That's why this needs to be ongoing, is because if you meet with somebody once a year, you're probably going to miss out on certain opportunities for these swings that occur in your life and the economy as a whole. And then, of course, we're adjusting and editing our strategies as necessary, which is why we want to get together quarterly and review these things. Hey, what's happening with the cash flow? Where are our liabilities at? Hey, do we need to make adjustments to our investments? How are they performing? Is that keeping you up at night? Do we need to make some shifts? Hey, you got a raise. Do we need more life insurance? You bought a house. Do we need more life insurance? It's always stuff that we need to be reviewing. And then, of course, by the end of the year, you always want to review, okay, where am I falling tax-wise? So there's no big surprises. Did you adjust your withholdings throughout the year? Do you need to adjust your withholdings for the following year? Do we need to be making Roth conversions? Those are things that we usually talk about in quarter four. So with our approach, we're looking to understand every goal that you have from every perspective and helping you understand what your goals are from your own perspective. What does achieving this goal or goals look like, both from a qualitative standpoint, like the feelings describing it, and the quantitative standpoint? What are the actual hard numbers that you need to be hitting to feel good about those goals? Who and what will help you achieve those goals? What motivates you? Who's influencing you? What level of risk do you want to take on? These are all questions that you need to have a serious sit down with yourself and ask, so you can have a general understanding. What roles do different people play, and being aware of the different players in the game. Do you have a CPA that you work with, or do you self-prepare your taxes? Do you have an insurance guy, or do you just count on what's through work? Do you have a financial planner? How much do you meet with them, or how aware of your situation are they? Do you have a lawyer? So it's important to know kind of who the different players in your life are. Similar to having everybody has a doctor, everybody has a dentist. Most people need a financial doctor as well, right? And then what additional resource do you need or are out there, from investments that are out there to the different types of financial vehicles? There's annuities, there's ETFs, there's index funds. A lot of people don't know these, or, they've heard blanketed statements online saying, hey, this is bad, that's bad. Everything truthfully has a place in the financial world. Is it right for you? That would be a conversation that you need to have with a fiduciary that understands your situation and your goals. And of course, what specific steps do we need to reach our goals? Are these goals relevant and achievable? We do an entire presentation on financial goal setting, and it's based on having a SMART goal, right? So that's basing your goal on something that's specific, measurable, achievable, relevant, and time bound. So with all these things that we talk about, is trying to break these goals down and saying, okay, well, if that's where we want to get to in 15 years, here's what we need to do today to make sure that we're walking on the right direction and on the right path as efficiently as possible. What is the timing of the milestones? That's kind of going back to what I said, is just really having these goals, defining them very specifically, and developing a strategy that will most likely probably get you there, right? So when it comes to it, our philosophy is just to provide you with meaningful advice that'll help instill confidence in your ability to meet the evolving goals as you move through the various stages of your life. Uh, Here is all my contact. I know this was a shorter one compared to some of the other ones that we do, but here's my contact information. I do no cost consultations for individuals, especially, if you're on this webinar, you're a member of our preferred network. So I'm very familiar with your employer's benefit programs, what your peers are going through. I make myself available for a resource, even if you want to just set up a 10-minute phone call to just run some things by me. I'm more than happy to chat. I usually have one of my interns reach out to everybody that registers and just say, hey, do you want to just set up a quick discovery meeting with Lucas? See if there's, any questions that you need answered, or, things that are timely top of mind that are going on that you might need some counsel with. So somebody asked a really, really good question, and I'm surprised I didn't have this in the presentation. So they said, how is your company's compensation model? Is it fee-based? Is it commission-based? Do you base your fees on a percentage of assets under management? So that's a really good question. I technically operate in a lot of those different spaces. So, when I'm operating as a fiduciary financial planner, typically I just charge a flat fee for helping an individual based on, the complexity of what their plan requires. And of course, like what we're dealing with. So, I'm going to charge somebody drastically different amounts if they're pulling in $500,000 a year and have $3 million in assets, compared to, hey, if they're a younger person, they're earning 50,000 and they're just getting started. So I do fee-based planning. I do commission-based products, but that's only if a plan necessitates like an annuity, where we're paying with annuities, you're paying for a guarantee of some sort. So it's either a guarantee of income or a guarantee of principal. Those are commission-based products, but I don't just sit around and sling annuities. I operate under the framework of a financial plan. If a financial plan necessitates one, I will use them, and there's no way around them from being commission-based. There's absolutely no way. But if it doesn't necessitate it, I don't sell them. So I'm always operating under the fiduciary capacity. If it's in somebody's best interest, I will set them up with a commissionable product, but my business model is not soliciting commissionable products. And then the last part of the question was, do you base your fees on a percentage of assets under management? The answer is kind of yes. So, as I'd mentioned, we're overseeing about $350 million of assets under management. That's where we have them in-house, and we're utilizing our money managers. So, by working with us, we have access to institutional money managers such as, the BlackRocks, Fidelities, American Funds, Morningstars, where typically an individual would only be able to invest in those things if they had, a minimum of $5 million. But because our organization's so large, we're able to give the consumers access to sophisticated money managers at basically whatever level they're at. I think the minimums come out to be 25,000. But with that, we do charge an assets under management fee if we are managing the assets. It typically comes out to be right around 1%, which is the industry standard. Any other questions while I'm still here? Yes, so the question was, do you have estate planners in your network? Yes, we do. So actually, ironically, my first 3 years of working in the industry, I was purely estate planning focused. So helping people set up trusts, fund the trusts, making sure that an estate plan was in order from wills, powers of attorneys, stuff like that. But that always needs to be involved with a lawyer. So myself, I'm not a licensed legal professional, so I can't establish a trust for you. However, you do need a financial professional to help retitle everything to the trust. So that's kind of where I come into play, but we do have an extensive network of trusted estate planning attorneys that we work with all throughout the Midwest. So, we have a couple in the Milwaukee area, a couple in the Madison area in Wisconsin, and then we have them all over surrounding the Chicagoland area as well. All right, I will hang on for about 2 more minutes. So if any other questions come up, feel free to pop them in the chat box. I want to make sure that any questions you have get answered now. But otherwise, like I said, feel free to shoot me an email, shoot me a text, and we can make sure to connect just so you can have your questions answered. Thank you so much for attending. I really, really appreciate it. Our team puts a lot of work into these. So keep an eye out too, because we've been doing these every month. I forget what next month's is. It should have been on the invitation, but we've been doing this as an ongoing financial IQ series just to help bring awareness to, what's out there. So, we've done college planning, we've done estate planning, we've done life insurance, we've done investment planning. I'm working with my team to kind of put together a page because I have every single one. I've done 20 of them now, at least for Advocate Health. They're all recorded too. So if there's a topic that you really want to learn about, shoot me an email or a call or something and say, hey, did you ever cover 529 plans? Or, something like that. Because at the end of the day, I make the presentation schedule. So if there's topics that are really timely, top of mind to you, I'd love to hear about them. So the last one we did was on Social Security. That was extremely well attended. We had like just over 100 people show up to that one. So, we're here as a resource to you. I'm going to hop off now. So I hope all of you have a great rest of your day. It's starting to feel like spring outside. So that's good. But thank you again for attending. And you have a wonderful rest of your day, everyone. Bye now.